Alright, what's good everyone? Hope all is well. It's Fear.ing. It's currently July 15th, 2025, and we're here to teach the lesson on precision candle, also known as a PRC. This lesson follows up on the PSP lesson. So in order to properly understand this lesson, as I state in the other videos, you have to understand PSP, sequential SMT, basics of ICT, the 2-day QT videos, free ones on YouTube, the significant highs and lows video, and the time frame alignment, both on the WAP. So what is a PRC? A PRC, similar to a PSP, is a cracking correlation among candles. It is also a 3-candle pattern. So specifically, a precision candle is when we form an up close candle on one asset, while on a correlated asset we form a down close candle at the same time on the same time frame, such as what we can see here. So imagine this is our 5-minute time frame. Again, same time as well, not just similar to each other. It has to be the exact same time. So let's imagine this as our 5-minute time frame. This candle, so we have candle 1 right here. Let's imagine that is 9:25. Candle 2 right here over my mouse is 9:30, and candle 3 on the right is 9:35. That is the same on all 3 assets. Candle 2, as we can see with the red dot hovered over it, is a down close candle on ES, up close candle on NQ, down close candle on ES. Again, imagine this is supported by 90-minute sequential SMT. This is a bearish example also, so that's something to keep in mind. And most important, there's no swing point attached to that, so that is what makes it a PRC compared to a precision swing point. Personally, I always focus PRCs as a high probability continuation entry and treating them as high probability order blocks. So that would look something like this. So this is the exact same candles on this chart right here. So as we can see, we have 90-minute sequential SMT at the highs, while also delivering out of our DFR projection, as we can see above. If you don't know what that is, don't worry about it. Pretty simple. You learn it later. It's simply a projection, also a significant high and low that we can use. Regardless, you'll learn that later on. All you need to know is that there's 90-minute sequential SMT, 5-minute time frame. This places down 5-minute CISD, and as we can see, after the 5-minute CISD, or I guess when we form that 5-minute CISD, we form a 5-minute SMTF. Now, some people might think, Fear, we should look for an entry within that 5-minute SMTF if we did not get an entry before then. However, we can see that right after the 5-minute SMTF is formed, this candle right here, this up close candle, is a 5-minute PRC. So the exact same sequence we can see right here. These are the exact same candles on this chart. So we use this as reference. As we can see, we're going to focus on NQ. And as we can see, price treats, once we close below that 5-minute PRC, we then trade back into it. We wick into it, as you can see really closely there, treating that as a 5-minute PRC order block. Now, let me show my chart so we can go over this and how you can actually trade it. So as we can see, 90-minute sequential at the highs, 5-minute PRC order block right here. As we can see, up close candle 9:35 on NQ, down close on ES, down close on YM. Drop down to a 1-minute time frame. I guess let us mark it out first. And of course, as you can see on that chart, we were targeting the daily cycle Q2 low. To put it simple, going into this day, we had SMT at the highs, no SMT at the lows. As you guys know, regardless of higher time frame narrative, if we have SMT at the highs, no SMT at the lows, that can immediately make us short-term bearish biased, even if the higher time frame is bullish. Is that if we have no SMT at the lows to support longs, we first have to drop, form that bullish SMT before we can validate higher prices. So specifically going into this day, we'd be looking for a drop down to the daily cycle Q2 low. So that is how we're going to utilize this PRC. Anyways, as you can see, the next candle opens, immediately trades into that. And honestly, technically at this point, after we immediately trade into it, we essentially form a CRSD as we trade into that. So we trade into that, we tap into the order block, and immediately see closure below this up close candle. Now, technically speaking, that is not a CISD, but for those who study my trade reviews, you will see that often I do use the invalidation of up close candles to validate a bearish move, or more or less a bearish entry. It doesn't always have to be a perfect CISD where we form a higher high. We can take note of the fact that we do actually have a higher high over here on YM, but nonetheless, it's technically not a CISD. It's more or less just an invalidation of an up close candle, which, as you guys know, based off what ICD explains in the sense of order flow, this is a sign of bearish institutional order flow, at least on the lower time frame. But we could use that as an entry, and since price is respecting it, trading away from that, we can anticipate that the 5-minute SMTF above us could potentially be used as a breakaway gap, putting our stops at that 5-minute SMTF, TP at the daily cycle Q2 low, and then potentially whatever sort of external low you have, which might have been the previous low, which is all the way down here, but we're just going to be targeting the low hanging fruit. This is not specifically what I would look to enter off of, as again, keep in mind, I'm not going to say keep in mind, but specifically going into this day, I was bullish biased. I'd gotten a bullish setup later on in the day, and I had taken longs. So if you go back to July 10th in the server, you will see that I had taken a long position once price had dropped down beneath our daily cycle Q2 low, but I'm not going to break that down here. Anyways, I'm just showing you guys how you can utilize a PRC for an entry. Obviously, many times it's going to offer a lot better of a risk reward, but in this example, it's just over 1 to 2. Not ideal, but nonetheless, it's valid. So anyways, can look to enter off of there, and as you can see, deliver down to the daily cycle Q2 low. Now, quickly want to zoom in here, see if there was a better entry or more optimal entry, which you could have actually gotten something here. So a more optimal entry could have been when price had that 1 minute CISD, instead of just entering as soon as we had that in validation of this up close candle. You could have waited for a 1 minute swing divergence, which again, you probably don't know what that concept is if you're watching these walk videos in order, but put it simple, it is a lower time frame cracking correlation, which we had right here. That could have validated us to drop down to a 15-second. If you wanted a more secure entry, you could have entered off the 15-second CISD. Nonetheless, your risk reward would have been very, actually might have been the same, honestly. Would not have been the best, but okay, it would have pretty much been the exact same risk reward as the previous entry, both of which would have been valid. And as you can see, we fully deliver all the way down to the low, but both of which would have been valid. Again, simply, that's not my model, but I'm showing you guys how you can utilize PRCs as continuation entries if you miss the reversal. So again, as we showed, and as you might have guessed, you have to use the right time frame alignment. I showed you guys an example of 90-minute sequential SMT to a 5-minute PRC. Again, the same time frame alignment as everything else is still applied here. Now, in the PSP video, I talk about how there is a circumstances where we can use a higher time frame PSP to confirm a lower time frame sequential SMT. The thing with that is it doesn't really apply to PRCs unless there is a PSP attached to that. And what I mean by that is, if we go back here, not there, but I don't have an example of that. Maybe I should have gotten an example of that, but the only times we can really use a higher time frame PRC is if it is also a PSP. So as you might have seen in the PSP video, I labeled the assets that do not form a swing point a PRC, because as we know, only one asset for a PSP has to form a swing point. If the other two don't, that's fine, as long as at least one forms a swing point, that is a valid PSP. On the other two assets, that is a PRC, and again, that can technically be used as a higher time frame PRC to confirm a lower time frame sequential SMT, but again, there has to be a PSP. If it's just a regular PRC, then we're not really utilizing that concept, and you should completely focus on the time frame alignment. Might be a little bit confusing, so ask me any questions if you have them, but I mean, it should make sense. Anyways, we'll just go through it. Yearly cycle, sequential SMT to a daily PRC, quarterly cycle to a 6-hour PRC, monthly cycle, 4-hour PRC, weekly cycle, 1-hour PRC, daily cycle, 15-minute, 90-minute, 5-minute, microcycle, 1 minute. So one more example. This one is more for continuation. If you miss the initial move, you don't really get the optimal entry. In this circumstance, there's actually a lot more confluences than just simply a 5-minute PRC like we had gotten back here. This time around, and what I'm showing here specifically is a PRC swing divergence, where, as we can see, it might be a little bit confusing if you cannot see very clearly. So I'll try to zoom in here. But yeah, we'll zoom in here. You can see this candle right here, this down close candle that I've labeled out as a 5-minute PRC swing divergence. That is a up close candle over here on ES is also a up close candle over here. Let me look at the time really quick. I believe it is this up close candle right here. Nonetheless, all three of them are up close candles, so whichever one it is, nonetheless, we do not soup the previous 5-minute low. So that is a 5-minute PRC swing divergence. In the most simple aspect, we can see that ES and then Q both soup the previous 5-minute low, and wherever that PRC is right here, we do not soup any sort of previous 5-minute low. So that acts as a high probability swing divergence, high probability continuation, and we specifically are trading out of a 5-minute SMTF while forming that. So due to that, we can then drop down to a lower time frame, 1 minute, 15 second. Obviously, you guys know the time frame alignment, but in this circumstance, it would be down to the 1 minute. If we have 1 minute cracks and correlations, we can drop down to the 15 second. But simply put, that would be something that we can look for continuation off of. We don't just have to treat that as a order block. Obviously, we do, because as we can see here, once we close above, the next candle wicks into that 5-minute PRC. So both of which would have been valid. Nonetheless, I'm just showing you guys an example. So otherwise, that is the overall lesson on PRCs. Honestly, pretty simple lesson and really should make a lot of sense. It might be a little confusing, but overall, once you start seeing it in your charts, it should make a lot of sense. But overall, that is the lesson that I wanted to cover. This example here is just, again, the PRC PSP that I was talking about. Because as you can see here, this 15-minute PSP in the middle on NQ. Again, we'll zoom in here just so you guys can specifically see. So candle 2 right here on NQ, up close candle. Candle 2 on ES, down close. Candle 2 on YM, down close. It is a PSP on NQ. It is a PRC on ES and a PRC on YM. Reason being is because there's no swing point attached to it. However, there is on NQ. So that is a PRC on NQ, a PSP on NQ. It is a PRC on ES and on YM. So just wanted to clarify that. Otherwise, that is the lesson. This might have been the more confusing lesson of all of them. Really, it should not. If you took your time, listen to what I said, but go find it in your charts. Go send me your charts in the server. Feel free to ask if they are correct. And yeah, otherwise, hopefully you enjoyed, and I'll catch you guys all in the next lesson.